UiPath stock is down more than 83% off the high. And in this video, I'm going to make my case for why I think this is an undervalued growth stock you can buy before 2025. I'm going to share with you the company's revenue growth, the improvements in cash flow and operating profit margins. I'm going to share with you what Wall Street thinks about this company's free cash flow prospects over the next several years. And finally, I'm going to share with you the valuation differences on why I think this is an undervalued growth stock, including my discounted cash flow valuation, which demonstrates a significant difference between the current market price and what I think is a fair price for UiPath stock. I'm going to do all this in this short video, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the stock price down over 83% off the highs reached in 2022, 2024. The big declines came early in the year when there was an abrupt change in leadership at the top. I'm not usually a fan of companies that have changes in leadership, especially abrupt changes in leadership. But the good thing about this change in leadership is that the founder is taking over as CEO again. The founder was the CEO earlier, and then they brought on a CEO, which was then ousted earlier in 2024, and now the founder has retaken the helm as CEO. So if there has to be a transition at the top, an abrupt transition at the top, at least this founder is the CEO again. So the company's revenue growth has been slowing considerably since 2021. In the most recent quarter, it generated revenue growth of 8.9%, but its latest products are catching on. Remember, UiPath generates revenue by offering enterprises improvements in its processes, especially improvements in repetitive processes for businesses that have to do the same thing over and over again, and they do those things manually. If you can automate those processes, that saves a company significant sums of money, improves operations, reduces errors, and so forth. And so UiPath is seeing great demand for those products. Nowadays, UiPath is incorporating artificial intelligence along with those automated services. And so enterprises are really looking to UiPath now, and even more so because labor shortages and increasing wages are beginning to bring in more businesses for these products and services. So more impressive than its revenue growth has been the improvement in cash flow. You could see in late 2022, and I've been talking about so many tech companies doing this same thing, right? Where for many years, tech companies were not very interested in improving those fundamental metrics like cash flow and profits. They were more focused on growth at all cost. But when the Federal Reserve and central banks worldwide started increasing interest rates to fight inflation, the cost of capital increased. And when the cost of capital increases, investors are pushing companies to focus on efficiency and not just focus on growth. UiPath was one of those companies that made a big shift to focus on efficiency, focus on cost control, and those are paying off. You can see the big change here. It's cash flow from operations. We're going in the opposite direction. We're getting more and more negative. And then it made those cost-cutting efforts that really improved operations. And you can see that improvement there all the way up to 23% from negative 12% in late 2022. Similar story with its operating profit margin. Company making those changes in 2022 that started to improve the operating margin from getting worse and more negative to improving and getting closer to profitability on the bottom line. Negative 12.83%, a big improvement from negative 60% in the same time in 2022. All right, now that we've looked at the fundamental prospects of the historical financial metrics, let's look at valuation. And when measuring by the forward price to earnings ratio, UiPath stock looks relatively cheap at a forward PE of 27. This is near the lowest you've been able to buy this stock, the lowest being closer to 20, roughly 22 forward PE. I don't expect this stock will approach those valuations again unless there's a big drop in the company's performance on revenue and reverses in the cash flow improvement and operating margin, which does not look to be the case, given that if you recall, I did a video when the company gave its outlook for this upcoming fiscal year. Management said that it expects the cash flow from operations to accelerate in 2025, to accelerate. And so management expects improvements in cash flow, is not considering those metrics getting worse. And in fact, Wall Street also expects improvement in UiPath and its free cash flow over the next 5 years, starting in 2025, where they expect the free cash flow to improve from 290 million to 320 million, and then all the way up to 540 million by 2029. Now, this isn't explosive growth, but it's steady and solid growth for UiPath and its free cash flow expectations over the next 5 years. So I shared with you the undervaluation when measuring by the forward price to earnings ratio, but that's only one way to value a business. Another way I value a business is by doing a discounted cash flow model, and that gives me an intrinsic value per share or a price per share that I feel is what the stock is worth today. And this calculation for UiPath gave me a price per share of $20.54. And the current market price is $13.91. So my intrinsic value calculation also shows me that the stock is undervalued. So whether I look at it from the forward price to earnings multiple or whether I look at it from the discounted valuation, they both point me in the same direction, which is that the shares are undervalued. Of course, that doesn't guarantee that the share price is going to approach my intrinsic value calculation. However, these are estimates and assumptions and valuations that I make to give me an idea of what the business is worth and what I'm willing to pay for a business. And these calculations are showing me that UiPath stock is undervalued. So for all of these reasons, investors looking for stocks to add to their portfolio in 2025, I don't think you should look UiPath, especially as it's bridging that crossroads between automation and artificial intelligence, something that enterprises are clamoring over in 2024, and I expect them to do more of the same in 2025. Labor shortages are not going to improve in 2025, and the cost of labor is not going to improve in 2025. That's going to increase desire for companies to look to automation and artificial intelligence to keep costs under control. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.